Hi, I'm Jonathan Schein with National Real Estate Investor, and we are at the National Net Lease Investment Conference in Chicago, and we just concluded the Capital Markets panel, and with us is one of the panelists, James Turner, from the Managing Director of the Private Bank in Chicago. James, first of all, what was your takeaway from this particular panel?
I think it was very active. Great participation with the individuals that were there, and I think it demonstrates how active this market is. There's a lot of capital out there chasing these types of assets, and just by seeing bankers smiling and talking again is always a good sign.
Seeing bankers in general is a good sign at this point of the cycle. So, from your point of view, how do you look at these investments and how do you finance them?
We always look at the credit of the tenant as well as the sponsorship behind any type of transaction that we do. Sponsorship becomes very, very important in this time. It's what we've seen over the last 5 years, where individuals have had difficulty, and the ones who've actually handled themselves properly are the ones that I think most banks are being able to flock to try to be able to do transactions. So we still need lots of equity into our transactions. We're not at a point where we're being over aggressive. Recourse is still a component when we're looking at transactions from the bank balance sheet standpoint. You can do non-recourse financing at a higher leverage, but then that's typically banks syndicate their B pieces out in order to be able to maintain the risk on their balance sheet, because we're still very concerned about how the economy is going to happen after the election and in the upcoming years. So we're very cautious, but we are bullish.
And what kind of equity are you looking for in a deal?
On construction deals, you're in the 35%, maybe even 40% type of equity into those type of transactions, where before the crisis you were up to 95 to 100%. Again, you can go up a little bit higher, but it's going to cost you as banks try to sell off the residual piece to other investors in order to be able to get those transactions completed.
Now, from your point of view and your bank's point of view, the private bank, so obviously the net lease market is very attractive to the high net worth investor.
Yes.
And how do you approach it? First of all, why is it so attractive for them?
I think they're just chasing yield. And when you have a credit tenant and you have real estate supporting that, it does become very attractive relative to other alternative investments.
I mean, do they also look at it as a wealth transfer strategy?
Some have been doing that. We have a very active wealth management department that helps individuals relative to that. From our standpoint, we're really providing the product to them by dealing with the developers on a day-to-day basis.
And what would you say the sweet spot for the kind of deal that you're actually currently in the financing of?
You know, our bank probably is in the $2.5 to $10 million type range is our sweet spot relative to our clients. We have gone higher than that in certain types of transactions, but we really focus it more on a client base as opposed to a transaction base model. So when our clients are banking with us and have deposits with us and do other services with us, we'll try to be as flexible as possible for them to be able to meet their needs across the board.
Is there a particular product type, or is it across the board?
Well, in the real estate aspect, we deal with the 4 major food groups, which is office, industrial, commercial, and residential. We'll do others, but that's really our key, and we really try to stick to our footprint of our banks in the markets that we know, where the clients are based. We'll travel with them, but we really want to make sure that we have a tight, strong relationship with our client.
Got it. James Turner, the Private Bank.
Thank you very much.
Thank you very much.
Talk to you soon.